As you might expect, the increasing violence in Ukraine will have a wide range of financial implications, everything from the price of oil to the value of your investments, but these effects may not be as straightforward as you might think. The invasion of Ukraine by Russia has sent shockwaves throughout almost every asset class on the planet. Stocks and other risky assets were at first in a free fall, only to recover some of their losses with a rebound on Friday. But is this a dead cat bounce, or premature optimism of hopes for a peace negotiation beginning? Traditional safe havens such as treasury bonds and gold are increasing in value. Oil and other important commodities are also rising at a time when inflation in the U.S. has reached a 40-year high. However, market experts suggest that as terrible and perplexing as the consequences of Europe's largest armed battle since World War II may be, the wisest course of action for most individual investors is to remain calm and carry on. Or is now possibly a good time to buy stocks at bargain basement prices in the hopes of gaining a huge profit? Here are ideas to consider before making any moves. As geopolitical anxieties swirl around Russia's full-scale invasion of Ukraine, investors should definitely hold off on putting money into the stock market, according to Paul Christopher, head of Global Market Strategy at Wells Fargo Investment Institute. The risk of the unknown and the situation actually deteriorating is just too large for investors to take. On the other hand, perhaps all this negative market sentiment indicates that now is the time to buy? According to MarketWatch, Ed Yardeni, head of Yardeni Research, which offers market information to money managers, says that the only bright spot right now is investors' pessimism. The investors' intelligence bulls and bears ratio decreased to 1.04 this week, down from 1.32 the week before. That means there are approximately as many bears as bulls, which is rare, and signals a potential buying opportunity, according to Yardeni. But he cautions that if the fight continues and oil prices rise, inflation will rise as well, requiring the Federal Reserve to stick to its plans to raise interest rates rapidly, potentially sparking a recession. Some traders are buying the invasion as a result of Russia's military operations in Ukraine, but a Friday report from Bank of America Research warns investors to be wary of the bear. That is, a bear market. On Thursday, as the Russian military invaded Ukraine, prices in both equities and crypto markets swung back and forth, plummeting before making a stunning recovery. After opening the day at 12,588, a 3.4% dip from the day's previous close, the tech-heavy Nasdaq enjoyed its largest ever one-day point increase on Thursday. The S&P 500 gained 1.5% on Thursday, reversing a more than 2.6% loss earlier in the day. And on Friday, the S&P 500 roared up over 95 points for over 2% rise in just one trading session. Very impressive indeed. But the fortunes of war change frequently, and the news from both the battlefield in Ukraine and the political decisions made in Washington, Moscow, Kiev, and other European capitals can greatly affect market attitudes. For example, just today, Saturday, February 26th, the United States, Great Britain, Europe, and Canada moved to limit access to the SWIFT international payment system for select Russian institutions as part of new sanctions against Moscow as it continues its attack on Ukraine. The sanctions, which include restrictions on the Russian central bank's international reserves, will be imposed in the coming days, according to the nation's joint statement, which also promised more action. What will these further actions be? Will Russia retaliate by withholding gas and oil from the markets? And if the price of energy skyrockets, how could the world economy and the price of stocks not be severely adversely affected? So after all is said and done, what should investors and traders do? We would love to hear your take on what investors and traders should do. And what stocks do you think are great buys during this crisis and why? And which ones should be sold? This is Stock Market Fever, and we would love to hear your advice and rationale and encourage you to comment below and join our community of people living on the edge, balanced precariously between greed and fear. Please subscribe and like and comment below.